Dan, we were going to talk a couple of the ETFs you guys just launched for the reopening theme, but given the inclusion of some of the pot stocks in your guys' funds, there's a big deal out for Trulieve acquiring Harvest Health and Recreation. What does this mean for how you guys think about this space?
Sure, it's a huge deal, and we think it's just one domino to fall. We think we're going to see more deals like this, consolidation in the industry. But also the real important thing here is this is a focus on U.S. cannabis. Don't confuse companies like Trulieve and Harvest with companies on the north side of the border like Canopy and Aphria. Well, Aphria doesn't exist anymore. They got acquired by Tilray, Kronos and Hexo and others. Those companies can't sell marijuana in the United States. This is a huge multi-billion-dollar deal. Trulieve's been a profitable and one of the very best operators in the United States, and it's a huge deal for them to acquire Harvest Health. It increases their footprint and especially allows them to dominate in a strong market that is Arizona.
Now, this applies, of course, to the YOLO fund, one of the easier tickers to remember for the pot space. And how does it work when you have M&A and deals as it pertains to the fund? How will that affect the holdings here?
Well, we already had Harvest Health in our top 10 holdings in the fund YOLO. And I got to point out our other fund, Advisor Shares Pure U.S. Cannabis, ticker symbol MSOS or MSOs, also owns those companies in its top 10 holdings, and that's a pure U.S. focused. But we own a good amount of those stocks. I don't think any other cannabis ETFs available in the United States own Harvest Health. And so we're a little unique in that. And people that watch our holdings every day, because our holdings are transparent, they saw that we were increasing Harvest Health last week. We were looking forward to their earnings announcement this morning, and we had a very nice surprise with this M&A activity.
Okay. And YOLO up over the past year, 140% is crushing a lot of the other stuff in its space. So looking forward to seeing how this affects that. And even as the equity market comes under pressure, broadly speaking, we've had some kind of dabbling of the reopened trade. So I want to go back to the focus for today, because as we were just walking through on some of the movers this morning, you've got analysts upgrading companies like Live Nation, which is up today, even as the market comes under pressure. But you guys have focused on hospitality. You've also focused on food, eats, and beds, both with Z's. Walk me through how each of them work.
Well, I wish I could have got the ticker with an S, but it wasn't available, so we had to get cute and get a Z.
Z works.
But the beauty of an ETF, it's a easily tradable vehicle. And we were rather surprised that a unique hotel-focused ETF didn't already exist, and neither did a restaurant-only ETF. So whether you're bullish or even bearish, whether you think the reopening trade is going to take longer, we don't care. This is a trading vehicle that people can invest in. Now, personally, we are rather bullish on the reopened trade. We think there's going to be more and more money as people have pent-up demand for travel. And for the other side is the restaurant side. Right now in the hotels ETF, we're focused a little bit more on the leisure side of the travel. But this is an actively managed ETF, and over time, we might weight more towards the business side of travel or more towards just the biggest hotel names that are really, global, worldwide brands these days.
Now, looking at how you will define beds going forward, I mean, obviously there's a lot of disruption in this space. How does Airbnb fit in there?
Well, they have beds. So we're interested in the major hotel chains, but also Airbnb. We also have a couple of the booking sites. We also have some of the cruise lines. So all the different types of stocks you see in here are all about people traveling once again, doing rentals, vacation, business travel, leisure travel, whatever it may be. And this is obviously a COVID bounce back play, but we are very bullish on this long term. And the same thing with Eats, the restaurants. we think if you look worldwide, people are only going to travel more, become more global. We don't see this being any kind of short-term play. We're bullish on it long term, but in the short term, we think it's a rather beautiful COVID bounce back play.